Welcome to Trading Nation. I'm Brian Sullivan. Joining us by phone, Paul Hickey from Bespoke Investment Group. Paul, all right, pretty good first quarter for the equity market outside of oil and gas stocks. What do you think the second quarter is going to bring?
You know, Brian, I think heading into the second quarter, we could see continued good things for the market here. Whenever we enter into a new quarter, we like to think about what's worrying the market, and then go from there and see if those worries are founded or unfounded. And two of the biggest concerns we see continues to be, well, first is valuations, which have been a concern for a while, and optimism over the Trump rally losing its luster. And regarding valuations, our view is that they're never a cause of a sell-off. You need another catalyst. So, sure, the market's expensive, but history shows it can become a lot more expensive. You need a catalyst to get the market to decline. And then concerns over the Trump trade losing its luster, there's definitely something to that, but and there's been some bumps in the road. But Trump has just been one factor driving the market here since, over the last several months. Other factors are the earnings recovery we've seen and the economic data that we've seen. Earnings have been rebounded significantly and continue to show growth in these quarters after some very depressed levels from the energy sector in 2016. And then on the economy side, we're seeing economic surprises doing very good here. And that trend didn't begin after the election. It's important to note. It began before the election in, September of October of last year. So that's an important thing. Trump has certainly contributed to some of the market gains here and has been a factor, but hasn't been the factor.
What do you think is going to be the most important factor then?
So I think, we still, as the economy continues to do well here, I think inflation indicators have shown some upward movement, but I think that's a lot of base. They're working off a low base from last year, so I think we'll start to see some of that level off. And just, looking at the consumer confidence report that we saw this week, that just skyrocketed. And while some people say that, that may be a sign that things are as good as it gets and the market, would be poised to decline, when we've seen, consumer confidence get up to this high a level after not doing so for such a long time, the market tended to do well going forward over the next 6 and 12 months. So that's working in the market's favor. And then the other thing to just think about is that, we've been in a sideways pattern here. It's a stair-step pattern that the S&P 500 has been in for a year now. So, we have a rally sideways. And, we always like to say the market is innocent till proven guilty. And at the high on March 1st, we saw breadth in the cumulative AD line hit a peak just along with the S&P 500. And more importantly, the number of new stocks hitting new highs that day really surged to over 25% of the S&P 500, and that was the best reading in over 3 years. And so all throughout this rally over the last year, we've seen new highs continues to expand. So if we get an upward leg in the market here and we don't see new highs expand, well, then that's going to be a red flag, and then maybe, the market's rally's losing some of its innocence, so to speak.
The Don Henley rally, the end of the innocence. Paul Hickey, or I should say the Don Henley downturn. Paul Hickey of Bespoke Investment Group, great analysis as always, buddy. Thank you very much. We'll see you again soon.
See you.
All right, take care. Folks, just a reminder, check out the live version of Trading Nation on CNBC's Power Lunch. I'm Brian Sullivan. I'll see you there as well. Take care.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.